Hi, this is Cayden Chang from VIA Value Investing Academy. I just want to let you know that in any investment, it requires some form of investment knowledge, even you have money.
I made some errors in the past in stock investment as well. I just put in money without knowing. After attending the VIA course, that was the most important turning point for stocks. The portfolio just went up and up.
So our intention is to minimize your risk by having good knowledge and then increase your return. So how do I get started? There are three sources of passive income that can be generated by investing in stocks. So let me start with the long term, also known as capital appreciation. So sometimes you hear people saying that, oh, I need to buy low and then sell high. When you buy low and sell high, the difference that you make is called capital appreciation. Second source of income, which is middle term, such that you can get it on a quarterly basis, is called a dividend. And remember, only a good company that has excess cash payout dividend. Now, there is one thing which I personally like, and Warren Buffett does it, is the third source of income called collecting of premiums or stock options. Every single week we can sell stock options, we collect daily income.
Investing has improved my life, especially the cash flow option strategy. So I have very regular passive income.
Investment is long term plus mid term and short term. Now, in order for us to invest in the stock in the first place, we need to know where to search for the stocks. So S stands for search. One way to search for Singapore stocks is you can go to the SGX stock facts, and then after a couple of minutes screening, you have found some stocks. So we go through a second process called evaluate. So now the question is, how do we know whether the company is good or bad? Is the company profitable? The second factor is we want companies that make money really quickly. We want to make sure that the company has very little debt or almost no debt. That would be ideal. Then we are talking about a really good company. Now, do we buy this company? The answer is no. Because no matter how good a company is, we do not buy a company at infinite price. So our intention is to buy something that is really good and is really cheap. So we use the third process called gauge. So we need to estimate how much the stock is worth. So in order to gauge the intrinsic value, we really need to use a tool. When we invest, we do not put all our money into one stock, because in case that stock falls sick, or in case a competitor outwit or outbid this company, then that's it. So what we want is we want a team of superhero stocks in our portfolio, so that at night we can sleep comfortably, because if something happened to one stock, we still have to rest. So our intention is to have knowledge, put everything properly, so that we have low risk and high return.
So in terms of investment results, in terms of ROI, is about 10 to 15% per annum.
1.5 years, I doubled my savings.
I have been investing for 3 years now, and proud to say that one of the stocks that I own is now a two-bagger.
We have a couple of masterclass coming, and what you will learn in detail. What are the ways you can search for a stock? What are more ways, in detail, the exact criteria of how you can evaluate a stock? And eventually, I'm going to share with you the amazing tool that we created, how we can estimate how much a company is worth, and lastly, how to form a superhero team of stocks. Register for our masterclass now.